Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
Agnico sets the pace as gold rips higher. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. Joining me today is Ammar Al-Joundi, President and CEO of Agnico Eagle Mines. Ammar, welcome back to Kitco.
Paul, always nice to see you.
Oh, thank you very much. Always nice to see you, particularly in the current circumstances. The performance of Agnico so far this year has been quite astounding. Some headline numbers there. In the second quarter, 866,000 ounces of production, record net earnings of $1.5 billion US dollars. In the second quarter, you had an all-in sustaining cost of about $1,300 per ounce, so a 60% margin there. Roughly, you're making about $2,000 per ounce. Wow. What are you most pleased about?
I am most pleased, Paul, that as the gold price has gone up, and our investors invested in Agnico because they wanted that leverage, that we've given them absolutely all of that leverage. You know, our costs have been very well controlled. Of the roughly $1,500 increase in gold price, if you think about it, our costs have gone up maybe $20 or $30 an ounce. So that means that roughly $1,500 increase in gold price, virtually all of that has gone to our shareholders, and we are very proud of that.
And it's not just that has gone to shareholders. I remember sitting down with you, it was probably a year ago, and we were talking about your share price just passing $100 US dollars per ounce. You're now at, let's say, about $150 US dollars per ounce. So your shareholders must be very happy indeed.
Our shareholders are very happy. And again, they've had a long-term view on gold. They trusted us, and we are absolutely delighted to be able to deliver the results and the share price performance that we have. We have, as the gold price goes up, Paul, as you know, we've had record quarters, quarter after quarter after quarter for the last several quarters. And frankly, at these gold prices, what's happening today and what's continuing to happen, we think that could continue to have record results going forward.
We're at an investment conference, and the performance of the sector is such that, are the generalist investors, are they starting to come back to the sector? They're starting to be attracted again? Is the gold sector something that they can no longer ignore?
That's an excellent question, and they are starting to come back. I can't predict how many or how quick, but what I would say is when you've had the type of share price performance that we've had, eventually the broader market absolutely has to pay attention to that. So we are constructive on that, and we do think that more and more of the generalist investors will have to come into this space, given, again, the exceptional results, not just by us, by a lot of our peers.
Your share price is up about 80% year on year. Some companies are in triple-digit gains there, and it's starting to speak to investors who are disappointed because they're only up 50%.
Yeah.
How things change.
Yeah, well, you know what? It's if you're worried that you're only up 50%, that's not a bad problem to have.
Definitely not. We've seen incredible margin growth in the industry. As I mentioned, you guys have a margin of about 60%, give or take, right now. To what extent are margins sustainable? How long will we enjoy them, or will they revert to the sort of historical average of around 30%?
Well, I'll tell you, I think the gold price looks like it's still got legs. And we are doing a great job controlling costs. So we think, as far as we can see, these margins of over 60% in our case are something that could continue. And right now, with the gold price, even expand.
Okay. Now, I think there's an argument that higher gold prices perhaps mask the fact that costs continue to increase, albeit not to the same extent. Your all-in sustaining cost was up 9% quarter on quarter, 10% year on year. Is the industry able to put a brake on costs, or is this, incremental increase quarter on quarter, is that the new normal?
Again, I don't think it is the new normal. I think we've been able to control costs pretty well. Our cash costs have been quite under control. The all-in sustain includes some capital items, but really, we've done a great job controlling costs, and we're going to continue to do a great job controlling costs and delivering all of that leverage to our shareholders.
Okay, well, let's talk about what you're doing with some of that cash and talk about capital allocation. You halved your debt in the second quarter to about $550 million US dollars. Your cash balance grew to $1.5 billion. What are your plans for the balance sheet going forward?
Well, to put it in perspective, in the first half of this year, we've strengthened our balance sheet by $1.2 billion. We've paid out $400 million in dividends. We've bought back about $150 million of shares. So we are delivering a lot of cash to our shareholders, about a third of our net free cash flow. So we've paid a dividend for over 40 years. We haven't missed a quarter. So we have a strong track record of capital discipline. And again, at these exceptional gold prices, while we are having good production, while we are controlling costs, I think that our shareholders can expect in this environment that we're going to continue to deliver a lot of cash back to them.
With gold at $3,600 US dollars per ounce, the cash flow is even stronger than it was in the second quarter. So are you revisiting your balance sheet, paying down debt aspect, or how quickly you want to pay that down? Are you revisiting the extent that you will return that to shareholders, or is there a sweet spot there that you'd like to stick to?
I think we can do it all. We are in a position to continue to invest in the business. And by the way, we have the best pipeline we've ever had in the history of the company. We've got a lot of projects going on. We can get into that in a little bit. But we can continue to invest in the industry, in the business. We have the most extensive exploration program we've ever had. We're paying the highest dividends, and we're looking at opportunities to consider increasing that. We're doing share buybacks. We're strengthening the balance sheet. And again, this comes from the exceptionally high gold prices and us controlling our costs.
Happy days. Let's talk about your pipeline. You have an enviable project pipeline. Canadian Malartic transforming to an underground mine, Detour Lake, mill optimization there, also optimizations at Macassa and Meliadine, and the potential Meadowbank extension past 2028. With the higher gold price and the cash flow that enables, is that enabling you to accelerate some of the projects or think even beyond there what comes next?
We are looking to accelerate some of those projects. So, Paul, if you look at the projects that we have, if you add them together, we see the potential for in excess of 1 million ounces a year of additional production. In fact, the numbers are about 1.3 to 1.5. Now, some of that is going to be replacing some production that comes off, but we have a very strong growth pipeline going forward, and we are looking at accelerating some of those. A little bit because the gold price is up, but mostly because the studies are going very, very well, and the projects are something that we think we might be able to move forward faster.
Okay. With the higher gold price, there's always a lag between higher gold prices and the gold price estimates that you use for your reserves and resources. How do you see that evolving as time goes on? Because there's quite a margin between them, quite a delta between them at the moment.
Well, that's an excellent question, and it becomes quite complex. It's one thing when you have reserves at $1,400 and the spot price is $1,700, and you're talking a $300 difference. It's another thing when reserves are $1,400 and the spot price is $3,600. So what I would say is we are focused on delivering margin to our owners. So over the near term, we're going to operate our mines by the existing mine plan at the existing cutoff grades, and so all of this additional revenue, all of this margin should go to our owners. Longer term, you do have to look at opportunities, whether it's increasing production, whether it is extending mine lives, but these are all good things, Paul, and additional value for our shareholders.
Okay, I want to talk about another aspect, another place where you're investing, and that's your strategic investment portfolio, your junior portfolio, to call it that. There's been a lot of talk this year about that and how much that portfolio is worth. I think a figure was banded around a few months ago of $1 billion. With the recent price increase in gold and in share prices, that's perhaps approaching $1.5 billion. And you recently sold your stake in Ammar Mining. How is your portfolio strategy evolving in this environment?
I'll start by saying we don't really view it as an investment portfolio. We view it as an opportunity to learn about companies. So this is part of our capital allocation process where we try to learn about companies that we're interested in. So we will make strategic investments, not, Paul, to have a portfolio of investments, but really to have a group of companies that we're invested in that we're getting a better feel for what they are. And so it gives us a knowledge advantage, which allows us to make a better capital allocation decision. All of that said, by hard work and frankly some good luck, the value of those investments have gone way up. We just liquidated a position that we had in Orla. The team at Orla did a fantastic job. We've been with them from the very beginning, and I think we sold our position for somewhere in the neighborhood of $400 or $500 million Canadian. So it's worked out very well for us. We continue to look at it, but again, the purpose of it is really to get an understanding of what's out there for capital allocation decisions.
With the gold price where it is, it's perhaps getting a little bit easier for juniors to raise equity financing and bigger amounts. Is it getting more difficult for you to be able to invest in the juniors because they can go to other places for capital?
Not really. The juniors like it when we invest in them because we bring a lot of value. We bring technical knowledge, we give them very good advice, and if I may say so, quite often it's viewed as a validation of what they're working on if Agnico has made an investment.
Okay. I'd like to sort of talk about one specific investment, if I may, because it does seem to be quite curious and therefore worthy of conversation. In April, after previously being diluted down, you topped up your investment in Rupert Resources in Finland, and you put your SVP, Carol Plummer, onto its board. Rupert's Ikaria deposit is near to your Kitco mine in Finland, but it has been unable to come to terms with its neighbour Orion Resources, which may preclude a larger transaction. When you look at that and two juniors unable to perhaps advance together, I imagine there's perhaps a little bit of frustration there. Is that why you put Carol Plummer on the board, to try and really get things going forward in a positive direction?
No, I wouldn't read too much into that, Paul. We put Carol on the board because she's an exceptionally smart executive at Agnico, and to what I was talking about, where these investments really are designed for us to get a good understanding of the various companies. Having Carol on that board is going to really strengthen, I think, the board at Rupert, and is also something that we feel quite comfortable with.
Okay. To wrap up, Ammar, let's take a step outside and look at the sector as a whole. There's been a number of transactions. We've seen Newmont divest a number of mines. We've seen Barrick Gold divest a number of opportunities. The number of producers, mid-tier producers, is growing. What's your view of the competitive landscape at the moment?
Well, we really just focus on we don't worry too much about what our peers are doing. We know the people at Barrick, we know the people at Newmont. They're very good people, smart people, look after their shareholder base, and we're focused on our shareholder base. And as I mentioned, production's going well, costs are under control, the mines are running safely. We've got the best pipeline we've ever had in the history of the company. We've got some of the best drill results we've ever had. So, our peers, they're smart people, they're doing what they need to do, but really we're focused on our own business.
Okay. Last week we saw a mega merger announced in the copper space with Teck Resources and Anglo American identifying they're going to get together. We haven't seen a big mega merger, a big deal in the gold space for, 5-6 years now. Is there room for another mega merger in this space?
Well, I think our view is always the best assets should be in the right hands, and you've seen that play out, and we've done a few deals like that ourselves. So, again, it's hard for me to comment on what our peers are thinking about, but from Agnico's perspective, we don't really focus on mergers for purposes of growing. We're always looking at what are the opportunities for us to create value on a per share basis for our shareholders. And that's not an easy thing to do, but we do that through exploration, we do that through early stage investments, and once in a while, if it makes sense, we'll do mergers or acquisitions.
Okay. Agnico has a lot going on, Ammar, so maybe we can finish by talking about some of the key catalysts that are coming for the company over the next 6-12 months that our viewers should watch out for.
Well, clearly, in my mind, the key catalysts are these projects that we have. The plan to get to Detour to over 1 million ounces a year, our vision to get Malartic to over 1 million ounces a year, the decision, when we make the decision, at Upper Beaver, that's over 200,000 ounces a year. Hope Bay would be about 400,000 ounces a year. Our share of San Nicolás, about 200,000 ounces a year. All of those, Paul, are projects in areas we already operate, with teams we already have, in many cases with infrastructure already in place. As I mentioned, we see the potential to grow to over 4 million ounces a year of production. At these prices, we have plenty of money to do it, maybe even reducing share count at the same time. So it is an exceptionally strong time in Agnico's history and an exceptionally strong gold market. And I think the next 6 to 12 months are going to be exceptionally exciting.
Well, congratulations on the great 2025 so far. Sounds like we've got a lot more to talk about in the future. I look forward to that. Ammar Al-Joundi, thank you very much for joining us today.
Thanks, Paul. Always a pleasure.
And we have a lot more to come from the 2025 Mining Forum Americas here in Colorado Springs, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.